All right, it's my first trading day back after the holiday season into the new year, and essentially I felt like this was the hard way to reach part of my daily trading goal. So if you're new here, I'm Hema Reddy. I use price, time, and momentum to boost my trading and that of my tribes. And my baby that I trade is the E-mini S&P 500 futures. So the current front month of this futures contract is March 2024, hence H24 symbol. So I'm going to quickly go through the higher time frame charts, but really focus in on what intraday trades I did today, Tuesday, January 9th, and show you, look, it's not all, gumdrops and rainbows for those of us who've been doing this for a while, especially when you've had a break from the markets, all right? So in the weekly chart, I saw that last week, obviously we had a weak start to the year, but based on calculations I had done with my own calculator I created, that I share in my GAN trading patterns course, I was confident that the Friday, January 5th low was going to be the low for some time. This came to pass on Monday's trading. You can see we had a strong green candle. And then today in the morning, I just wanted to see what roughly would be the midpoint of it and got this 4759.25. So that was my first bit of evidence that 4759 to 4760 would probably be a good support area. And moving to the 60-minute chart, I did my skinny on the mini market prep, as you see here, my report that I've been doing for years and years, sharing my ES analysis with traders every morning. And when I did that, I had all of the pink support lines and blue resistance lines that you see here, and the market was forming the bar into 10 a.m. Obviously, the market hadn't opened yet. Now, I was more or less hung up on, the idea that the market would trade down to 4760.25, this old top, and close to that daily midpoint level. And I was just like really convinced of that. So I had a mindset of wanting to go short on this move. All right. So coming to a 3-minute chart, and you can see I have some more annotations here. I have some more forecast drawn and all of that extra data. But let's just look at the market open. So I'm just going to put a line to represent the first bar of the day, okay? I'll just kind of make that like a yellow highlighter line. And this is what unfolded, okay? So I make trades based on a combination of 3-minute chart and 15-second chart signals. That's right, every candle representing 15 seconds of action. And what happened here was I was, like I said, pretty convinced that we were going to trade down to this support zone. So I went short pretty much right after the market opened. Looking at my trading journal, it was 9:31 a.m., okay? So I lived through all of this recovery higher. I felt emotions. I feel them just like you guys do, okay? I felt the fear of being wrong. I felt, worried about being right. All those things, they don't go away. I just manage them. And I told myself, look, you're just getting back in the swing of things. Maybe that wasn't the best entry, but you have a protective stop on. So all my trades have a max 4-point loss per contract, and it's 2 contracts at a time. So my protective stop was 4 points above my entry of 4773.25. So when you look at that on the 15-second chart, which now has chart trading so you can see it easily, okay? When I went short here, my stop was sitting out here and never got hit. So I just lived through all this churn, patiently waited. It was about 10 minutes, guys, more than that. Finally, the market turned back down, and at 9:44, I got out of my first exit. And then after that, the market moved lower. I trailed the stop lower, and it got out on my second, okay? So that was not an easy way to make a winning trade, and it didn't even make it that much of a win. But I also gave myself some grace because I knew I'm kind of just getting back in the flow after a few weeks of not being in the flow. All right. From there, I saw an opportunity and I sold again. Because again, I was kind of hung up on the numbers 4760. I was just like so convinced for whatever reasons that we were going to go down there. So I went short, kept going, and then boom, I was stopped out. So this one, I just lived through the pain. And it was just not good. However, I got a new idea. Yes, even I, with all these years of trading, I get new ideas about how to adjust my plan while trading, and I make a note of them, okay? I don't change my trading plan while they're happening. And the idea I got here, my advanced RSI Power Zone students, you'll understand this one. I literally wrote, maybe I should start putting alert horizontal lines on the recent 15-second peaks on the RSI and troughs to be more in tune with, and the rest is a concept I teach in advanced RSI Power Zones. So yeah, great. I got a new idea about how to approach something because I've only been really dealing with this 15-second chart for less than a year now. I moved to that to accommodate all the volatility that has been unfolding these past years in the market, all right? All right, so moving along. Even though I went short and got stopped out, when the market came up higher, so let's jump back to the 3-minute chart, when it came back up to this old bottom at 477.25, I was pretty convinced that we were going to have a move lower and that if I wanted to buy down at 4772, which is the high of this 3-minute price probe, well, I should sell along the way. Okay, it's a tenet I learned from my late father to be used very, very carefully. And in this case, it happened to work out. Let me show you what I mean. So again, looking at my mouse, where it is, let me get more narrow. Sold at about 4775. So you can see that here, okay? With the expectation to likely buy at 4772 if the market showed stabilization, but it didn't. So I got out of my first exit, which is a 2-point win, started trailing my stop, and then I saw, hey, the market didn't stop at the high of the 3-minute price probe. It came to the middle of the 3-minute price probe. But I wasn't still quite confident to go long at that level. Because think about it, in the reality of the moment, guys, it looked like this. It looked like this big red candle was forming, right? But I also had, again, trading pattern unfolding that, again, because I'm still sort of like warming up, getting back in my groove, I kind of missed. I didn't see that pattern happening. So I am looking at this and now thinking, okay, in the moment, I was thinking, this is starting to turn higher. Let me go long. So, as you can see here, I got out on a trailing stop and then I immediately went long again around 4772. And I'm saying these roughly, these numbers, because I just want to keep the pace of this video. All the details of my trades are in my members Facebook group with this video. So you can see I got out at the first order, trailed. And then I got out here. Looking back though, I really actually moved the stop too soon. It happens. I was rushing. I moved the stop per this 2-bar low, but really I should have kept the stop beneath this price low. Because if I did, this was a price low, market recovered. This was a price low. And even if I had moved it below this low, I wouldn't have been stopped out here. And I would have been taken up on this trade all the way up until these levels that you see right here. So I would have added a good 3-4 more points to my wins if I was following my trade management properly. So there you have it, okay? Ended up being a $468 day, but God, that was like a hard way to make $468, right? And listen, it happens to all of us. Doesn't matter if you've been trading for 2 days, 2 months, or 23, 24 plus years with exposure and experience with the markets like me. This happens. The thing is, by making this video for you, I have just reviewed my trades for the day. I have my takeaway lessons, right? I'll go back and review this video at the end of the week and pull the key nuggets, and then I'll keep reviewing those. It's a constant exercise, guys, of understanding what you're doing that's good and repeating it, and understanding what you're doing that's not good, okay, not per plan, and fixing it. And giving yourself some grace if you're just getting back into trading after potentially weeks or even a month away from the markets. It happens. The holidays are for family and friends for many of us, and then we get back in the groove. So I hope this was helpful to you. Those of you who are in my tribe and in my current courses, keep an eye out, particularly this week, for all kinds of coaching opportunities we're having. And this video is out here for you. So whether you're seeing it when I did it live or not, remember, anytime you have a break from the markets and you come back, it's okay if things are a little sloppy. The key is not to have it be a repeating pattern, okay? Awesome. If you got value out of this video, please punch that like button and subscribe to my channel, and let me know down in the comments, particularly anything you got of value, any requests you have, and I'll be happy to check it out. Catch you next time.